Okay, we're back. Had a little malfunction there. NVIDIA beats earnings. Can you believe it? I know a lot of people were thinking they're not going to beat earnings and people were shorting the stock, but their fourth quarter earnings, their fourth quarter revenue is almost as much as all of their 2022 revenue. They're just growing at an unbelievable pace. Bottom of the screen is like a ticker going on. So, but I'll just read it out and then we'll look at their quarterly report and we'll go through it to see if we can learn more. So expected EPS 464, they reported 516. Expected revenue 20.6 billion. They reported 22.1 billion. And you probably know there was a pretty big sell-off the past 3 trading days. I think the stock was down 8-9%. Let's see if we can see it on this chart. It might be hard to tell. But yeah, it was up to 730. That was on the 16th. And it had a pretty big sell-off because investors were not anticipating them beating earnings. And I think the market was thinking close to 23 billion. So anything shy of 23, there was going to be a sell-off. So it has rebounded after hours. It's up 9% after hours. But I'm not sure if it's how long it's going to take to get back up to where it was last week. Yeah, because right now it's 735. So which is a little shy of its peak of 739. So it's pretty much right there. So I guess they're all their losses, people who took in their gains the past few days, it's all come back. So if you sold your NVIDIA stock thinking you did a smart move, well, it looks like all the gains have come back. So if you shorted it, you're out of the picture. You have no shot. But anyways, revenue is up 265% year over year from strong AI chip sales. Gaming revenue is actually only up 56%, which doesn't sound that bad, but that was how the company started. That was their bread and butter. And that's only up 56% year over year, up to 2.8 billion. So that's not so great because their overall revenue is up 265%. So like if you stripped out gaming, they would be up 300%. Gaming actually brought them down. So that was an interesting thing. But automotive declined. Automotive revenue declined 4% to 281 million. Pretty small part of their revenue. OEM, and that OEM includes crypto chips. So you would think that has potential, but that only rose 7%, up to 90 million. Their graphics hardware up 105% to 463 million. So I mentioned earlier, if you just tuned in, stock is up 9% or 61 points after hours. It's in the top right corner of the screen. Can you see it? I can't see it on my screen, but I put the little thing from Yahoo Finance showing you how much they rose after hours. Up 9%, 61 points to 736. So it's pretty much, which I'm pretty surprised. There's going to be a pullback because that's almost right there at its all-time high. Its all-time high is 740, which was a few days ago. And so I think there could be a little pullback in the morning. But if you sold thinking it's going to go down after earnings, then you're out of the game. I mean, you could buy back in at a higher price, but I don't see this stock going down in the short term. In the long term, it has to come down because I don't think it could sustain these levels. The problem is it's such a big part of the market, the S&P 500, and you might not think it's just one stock, and there are bigger companies. There's Microsoft and Apple that are bigger, but the problem is their gains this year are like a third of the entire market gains. Like they brought the market up about a third, just them by themselves. You know, Apple's a big company, bigger company. So is Microsoft, but they didn't bring up the market that much. A little bit, but this company brought the market up more than anyone. Of course, Supermicro, you're familiar with Supermicro. They perform better in the past year. They're up more than this company, but they're such a small company. They don't really move the market like this company does. I don't see any pullback anytime soon. I don't see it either. I just don't. In the past 1 year, Supermicro is up 700%. This is up 200%. In the past 2 years, Supermicro is up 1,900%. This is up 185%. In the past 5 years, Supermicro is up 3,600%. This is 1,500%. If you go to max, of course, this stock is up like 1,000,000,000% because it's just like on another planet from where it started. But in the past 5 years, Supermicro is up more. The problem is Supermicro is not as big of a company, so it doesn't move the market. 40 billion market cap. This company sneezes on a $40 billion market cap change. It doesn't even flinch. It's like a rounding error. It's kind of like if you go to the deli and get a bagel and drink, and it's $6.85. You put the change in the bucket. That's like $40 billion to this company. It's like the change in the bucket. It doesn't matter to them. But if you did invest as an individual investor, you would be up a lot more on Supermicro. There are other companies. So the problem is, did I miss the AI boom? Yeah, this company did, of course, unless you're willing to invest at these levels. But there's a lot of companies, a lot of supporting companies. Let me know in the comments if there are other companies that you feel are going to support AI and go up more than NVIDIA from this point on. Because from this point on, I just can't see NVIDIA growing. I can't see them doubling. I mean, I just can't. If that happens, I may have to jump off a bridge because then something's going on with the world. You can't have a company like this at a 3 trillion market cap, bigger than anybody else. Because as great as you're doing, 20 billion market cap, 20 billion revenue is nice. It's a nice number of revenue. But you have companies 60, 70, 100 billion of revenue in a quarter that are much, much smaller than this. So it still has a long way to go. But let's do the boring part. This is the boring part. So I know a lot of you might leave, but we'll go through their release to see if we can understand it better. And I'll try to explain. That's just how this channel is. We go through the financials and I can explain everything. I can't tell you if the stock will go up in the future because I have no idea. I just know the market will go up 100%. How about Google? Google is a great company, much better than NVIDIA, much better. But Google is actually, are they smaller than NVIDIA? I think they're actually smaller, right? Because NVIDIA took them over, right? 1.78. Okay, so Google is still bigger, 1.66. So this is what I'm talking about. Might as well gamble on Spirit. 45 billion revenue trailing 12 months. That's a lot of revenue. I'm not saying that's not great. That's a lot of revenue. 45 billion. But Google, 300 billion. And do you know revenue? You can't you can't say that. You can't say 100 is better than 200, or 200 is better than 100. You can't say that. Revenue is not equal. Companies are different. If you had a grocery store and you had $1 million of revenue in your grocery store, right? That is much worse than my $500,000 of ad revenue on my website. You know why? Because in a grocery store, for that million, maybe if you're even a high-end grocery store, maybe you could put 8% margin. If you're a really, high-end grocery store like a Whole Foods, 8%. I'll give you even the benefit of the doubt and say 10% margin. It's expensive. Why is it not as good as ad revenue if I had a website? Because you have employees. You have to buy the products. Half your revenue is just the products alone. You have to buy it. You have to get to the store. There's spoilage. There's just so much. You got to pay rent. But if I had a website that I built, a really cool website, say I had a website that I built that talked about the stock market, and people went to the website to learn about the stock market, and I didn't charge anybody anything. It's all free. You go there, you could read articles. I pulled the tickers from the day, all this stuff. I'm no Seeking Alpha, but $500,000 of revenue is not a bad year for me. It's all profit. My margin's like 90%. I don't have rent. I don't have payroll. I don't have to pay anybody. It's all profit, all the ad revenue. My time, of course, is important. And if I scale and grow, if I become a Google with 300 billion of revenue, sure, of course, I'm going to have more expenses. Expenses go up, right? But I only need a handful of people to maintain these websites. I'll show you what I mean. 300 billion of revenue, 74 billion of profit. So 74 over 300. So net margin 25%. Let's see. Maybe I'm wrong. Let's see what their revenue 22,103. What the hell happened? 22,103. What's their net income? 22,103. Oh, it's 56%. There you go. Their margins are 56%. So that's actually pretty good. So let's just go through their okay. Record quarterly revenue, 22.1 billion. That's just for one quarter, up 22%. Up 265%. So that's like more than tripling their revenue. Let's see if they show it. Q4. So they went from 6 to 22. So if they tripled their revenue, 6 times 3 is 18. They more than tripled their revenue year over year. So Q4 2023 to Q4 2024, they more than tripled their revenue, up 265%. See, you might think, why aren't they up 300%? Because 3 times their revenue is is 18. So they're more than 3 times their revenue. Shouldn't they be 365%? But it doesn't work that way. If you have 100 and you go up to 200, you're up 100%, not 200%. You see? Even though you doubled your revenue, you're not up 200%, you're up 100%. A little math fact there. Okay, so let's go back to the data centers. That's why they're so big now, because of data centers. The growth of data centers. So where do you see data centers going? Do you see data centers continuing to grow? They didn't even talk about China in here. I guess they don't want to talk about the negatives, but I think so. A big issue, and if you want to get into semiconductors, or if you want to find the next AI, here's a big problem with this company, and no one's seen it yet, and no one's talking about it, but there's restrictions, U.S. restrictions on exporting semiconductors to China. They're limiting that. So it's getting harder and harder for U.S. companies like this one to export to China. And if it continues that way, then that's a huge part of the world they're cut off from. So if you want to see growth in AI, buy a Chinese semiconductor company or an Asian semiconductor company. Possibly Taiwan, but I know Taiwan and China are having their conflict as well. So let me know in the comments, are there any Chinese semiconductor companies? I know there's a lot of Taiwanese. Taiwan Semiconductor is the biggest foundry in the world. And this is the biggest fabless in the world. But if you want to see growth, maybe go into Chinese semiconductor companies, because once American companies get cut off totally from exporting to China, they're going to need a lot of support internally to grow their semiconductor business, because they want to compete in AI. China will want to compete, of course, like every country wants to compete, but China is a big and growing country, and they have the funds to do it. So let's see. Record full year revenue of $61 billion, up 126%. So full year, 61 billion. So, okay, so for the quarter, just for the quarter, it's up 265%. This is why they use a lot of words. They use words like adjusted, or they kind of like I thought the way they made it sound when I was reading the headlines was 265% full year revenue. It would be much more impressive for the full year, because for one quarter, it's a little easier. I'm not saying it's easy. CQQ might be a Chinese Google. I was saying, if you were going to have your best quarter ever and your best growth, it's going to be Q4. It's not going to be Q1 or Q2 or Q3. It has to be Q4, because Q4 is when some companies get 50 to 75% of their revenue. Some companies actually get 75% of their revenue in Q4. Some companies get half their revenue in Q4. Very few companies get below half their revenue in Q4 because of the holidays. So if you're going to have your best quarter ever, it's going to be Q4. So just something to think about. So you might see a pullback in Q1. People not realizing that usually when you have a lot of sales, like your sales are loaded up one quarter or 1 month, you tend to have a pullback, because I don't know if you've worked at companies that need to hit their targets, their revenue targets for a quarter or a year or a month. And if they're shy, they will do what they can to push things into that month or quarter to hit those targets. That's just how they do it. And then the problem is you might have to, you're sacrificing one quarter for another quarter, because you can't always push all your revenue into each quarter, because eventually you run out of revenue to push and maneuver around. And this is the kind of stuff I talk about on my channel, is how I get kind of deep into financials. So how do companies kind of cook the books or manipulate the numbers? Because you could do that. You could do aggressive depreciation in a quarter to bring down your income. It might sound, why would you want to bring down your income? Because you'll lower your taxes. And what happens when you lower your taxes? You save cash. So if you want to maintain some cash flow, you aggressively depreciate things, which isn't against the rules, because there are a lot of accounting things out there, and some companies can use up all the depreciation in the early years as opposed to spreading it out. What about Intel? Intel's a great company. Intel is another US company. The problem is Intel is just doing, they're just doing awful. CQQ, what's CQQ? Invesco China ETF. Okay, that's not really a semiconductor company, but that could be a good hedge for so let's see what they say. So if you ever see the headlines, record-breaking revenue, record-breaking profits, all this stuff. Looking at the financials, you'll know for sure how accurate that is. Sometimes they fudge the numbers. They just say, well, adjusted earnings were this much, not actual earnings, or adjusted gross profit, or adjusted free cash flow. Lots of that adjusting. For fiscal 2024, revenue was up 126%. So revenue a little more than doubled year over year, which is good. 61 billion. Can they maintain doubling? Is the market share out there? If they get cut off from China, then I just don't see how that's possible. But they don't even mention the word China. Do they even have a breakout by? That's the problem. If you want a lot of info, you need to look at the 10K. I don't think this quarter is a 10K quarter, but let's see. So revenue up 64%. GAAP EPS was almost $12, up 600%. That's a lot. Non-GAAP EPS was up 300%. Non-GAAP. That's interesting. Let's see what they say. Our data center platform is powered increasingly diverse GPUs. Okay, NVIDIA RTX introduced less than 6 years ago. 100 million gamers and creators. The gaming revenue isn't really growing much, but of course you have to say the positives. You can't. Let's see if they give a breakdown. They have to give a breakdown by. Okay, let's see the outlook for the first quarter. They're actually in 2025 because the way they do their accounting year, I think their fiscal year ends in January. So they're starting their 2025, which sounds confusing because they just completed their 2024 year, which ends January 2024. So they completed 2024 already. In the first month of 2024, they completed it. So they're starting their 2025 fiscal year. So the first quarter of 2025 is the 3 months ending April 2024. So that's why it says first quarter of 2025. That's next quarter. That's the 3 months ending April 2024. So revenue expected to be 24 billion plus or minus 2%. So 24 billion. So they're expecting Q4 so they say 24 billion. So plus or minus. So that's the range. The range is 23.5 billion to 24.5 billion. Spencer, curious to what the new forward PE is with this earnings. What about Intel? Okay, here's an interesting chart. Here's their PE since 2010. So blue is PE, and the gold is price of sales. So you can see they were actually, look how high PE was. It's really hard to tell in this chart. I think that's 2023. And look how PE has come down. PE is below 20 now. Price of sales is actually higher because their revenue isn't keeping up with their market cap. Because as you probably know, price of sales is market cap over revenue. So if their market cap keeps going up and up and up, so does their price of sales and price earnings. Because it's a numerator of the equation. Same thing with PE. PE is market cap over earnings. So you can see their earnings are keeping up with their market cap because their earnings are sub 20. They were, look how high their earnings were. They were trading at like 50 times earnings. That makes sense. Thank you. I knew it didn't seem right. So they were the left is the PE. So they were trading at 200 times earnings. But even so, it came down dramatically. It really came down dramatically, their earnings. So they are growing their earnings as quickly as their market cap. Their sales, though, are not, because you can see their price of sales on an upward trend. But generally, the higher these ratios are, the more growth the market predicts. Because remember Amazon and Tesla when they were trading at 500 times earnings or 800 times earnings, because the market perception was so high for the future. So people were buying the stock well before they ever hit these levels. You got to admit that's pretty impressive. They're sub 20 PE. That almost seems like it could be something like a large gain. Like that doesn't seem like it's true. They're true earnings. It's probably something like a which we're gonna have a hard time finding in this. We would need to look at the full 10Q to probably get all the information. But there's still, strong margins, high 70% margins. That's gross margin, of course. And so, okay, data center, that's where most of their growth is. So 18 billion in data center alone, up 400%. So 5x, 5 times from last year's data center. Full year up 217% to 47 billion. So 18 billion of data center revenue. And all their revenue is 22 billion. 18.4 over 22.1. Richie, after I did that stream the other day, I realized why the picture was so bad. I was using the free version of StreamYard. I thought I was paying for it. So it's such lower quality on the free version because it looks a lot better now, right? Because I'm paying for the pro version. If you can confirm that, because I couldn't figure out like why the quality of the picture was so bad. And then I was trying to look into it, and then I realized I wasn't even paying for the service. I used to pay for StreamYard, and then I stopped paying, and I totally forgot I stopped paying. If you could confirm that, it should be better, a lot better quality. So 83% of their revenue is data centers. So it's kind of like it's like being really heavy in one area, which is not ideal. You want to be a little more diversified. So if one product doesn't sell as well, then you go to another product to pick up the slack. So that's a little, but it's working. So launching collaboration with Google, optimization across NVIDIA's data center and PC platforms, groundbreaking open, expanded strategic platform, Amazon Web Services. So they're working with Amazon, the largest cloud computing company. They have 1/3 of the cloud computing market. AWS, Amazon Web Services, about 35% of all of the cloud computing market. And then who's number 2? Is Google's number 2? Google, I think like 20%. Microsoft Azure is like 10-12% of the cloud AI market. I feel like I'm missing somebody. Am I missing someone? I know Alibaba is like 8%, I think. Cloud market. It's cleaner now. It's good to overlap your images too because the shared screen is large. Yeah, and I also cut off part of the screen. Now I have so Amazon's number 1, 31%. Microsoft number 2. Oh, I said Google was number 2, right? It's Microsoft's number 2. And then Google and Alibaba, of course, and then some other stragglers. But that's the future. The future is cloud computing and AI. And if you get into those two things, then you're set. Introduced NVIDIA Monai announced plans with Cisco to help enterprises quickly. Fourth quarter revenue. So gaming fourth quarter revenue was flat from the previous quarter. So quarter over quarter, like 3Q to 4Q flat. So data center up 27% quarter over quarter, flat in gaming. Up 56% from a year ago, but that's a different story, up from a year ago. Full year up 15%. So that's a great thing to lean on, especially if data center there's a little pullback. But I see a crash. I see a crash in the stock in the first quarter because it's getting harder to sell in China, and I think the first quarter they're not going to hit that target. Let's see. It's just hard to imagine. I guess anything's possible. It's just really hard to imagine. Because they don't have 3Q, they don't have 4Q on the site yet for Yahoo Finance, but 3Q is 18 billion, 2Q is 13 billion, 1Q is 7 billion. So they're saying 1Q, which is 4/30/2023. So 192. Let's just say that they get the low end at 23.5 billion. They would have to grow 227%. So they would have to little more than triple their revenue to hit the low end of the target. It's got to be a pullback, but I don't want to tell you guys to short it. But the problem is, if there's a pullback here, it hurts the market because it's such a big part of the market at this point. Launched GeForce RTX starting at $599. Announced AI. Introduced microservices. Reached a milestone of 500 AI power. Okay. So I guess fourth quarter professional visualization, that's up 11%, 100% from a year ago. So that's pretty significant. It doubled from a year ago, but it's a small part of the revenue. It's only 1.6 billion. It's relative to gaming is 10 billion, and of course, data centers is 48 billion. Automotive went down. Both quarter up 8% from the previous quarter, down because you don't really compare quarter over quarter. You don't compare third quarter to fourth quarter. I mean, you could compare it. They are comparing because they're up from the previous quarter, but you should really compare the quarter of this year to the quarter of last year because most businesses are seasonal. So you want to compare. It gives you better information. Very few companies are kind of flat where 25% of their revenue is in the first quarter, 25% in the second quarter, or even close to that level. It's usually like 58% in the fourth quarter, 12% in the third quarter, something like that. I think the first quarter is the worst quarter because everybody's so low on funds from the holidays and they're just trying to get out of debt. Full year revenue rose 21% to 1.1 billion in automotive. Announced further adoption of NVIDIA drive platform with Great Wall Motor Zeekr. So yeah, so that's that. Oh no, okay. So here's our actual. Okay, this was a summary. So here's their. Let's see. This is their income statement. This is their balance sheet. And this is their cash flow statement. Okay, so this is the boring stuff. This is the boring stuff. So if you really want to like truly analyze a company, of course, this is just one small part of it, because to really analyze a company, you need data over like 8 quarters would be ideal, because that's 2 years of information to look at. You know, I could have prepared this better, but I spent like a half hour getting this video set up, and I was just like, it's never gonna. This is what I mean by prepare better. I'm gonna bring this closer to here so it's easy to see on the screen. So when I blow it up, you can see it better and it's tighter. So we can compare, you can compare the full year or the quarter. Let's just do the full year, because let's do both for revenue, because okay. So okay, okay. Is there a lag? It's taking a longer time for me to enter this stuff. I guess because I'm live, maybe, I don't know. Okay, so let me show you what I mean by comparing, because you don't want to just compare revenue. Well, you do want to compare revenue, of course, but there's a lot more to compare than. And this is a good way to find out if they're telling you the truth, because sometimes they lie. You know, not just the company. Not just the company. The company does lie sometimes, but other, channels may embellish. They went up 300%. They just round it to 300. So revenue is up 265% for the quarter, which is amazing, 265%. And then for the year, 126%. So it's really hard. I mean, if you have a company with $1 million in revenue, $1 million to $3 million is so much easier than $1 billion to $3 billion. Like growing at these numbers is very, very challenging. So their revenue went up 265%, and their cost of revenue went up 139%, which is great. So they're not only increasing revenue, they're increasing their margins. So that means it went up probably like 200%. Oh no, I want to say it went up over 300% because that's just amazing. So their gross margin, their margins went from 63 to 76%. Just pretty ridiculous margins for a manufacturing company. And then operating margin, you want to compare everything to revenue. I mean, you could look at it over this doesn't seem right. How does... Okay, well, that's their expenses. Okay, let's look at net income. So somehow I don't know how that's possible, but their net profit margin went from 23% to 56%. Let's see their operating income. So their operating income went from 21% to 62%. It almost seems impossible, doesn't it, that you can grow that much? So I guess they are the real deal. Thanks for watching. It's kind of a new idea I had. Just do some aftermarket analysis. So let me know in the comments if this was a good idea. And maybe I'll kind of add this to my kind of routine. So I'll talk to you later. Thanks for joining.